Assalamualaikum and good morning to everyone, especially to Madam Suryanti. And today we are going to present our assignment business finance. And for my part is liquidity ratio. So there is two type of liquidity ratio, which is current ratio and quick ratio. So for answer current ratio in Hikmah Bakti Berhad. So the first one is what is current ratio. So current ratio is commonly known as the working capital ratio and is a popular method for assessing a company's short-term solvency and refers to a company capacity to pay its short-term as they are due. So the second is calculated the current ratio for Hikmah Bakti Berhad. So current ratio is current asset divided by current liability, and so for the numbers is 4,400,000 divided by 2,200,000. So the answer is 2 times for Hikmah Bakti Berhad. So based on industry average is 2.1 times. So third, for compare with industry average. So as we all know and see, that the industry average are 2.1 times compared to the Hikmah Bakti Berhad, which is 2 times. It's supposed to be higher than the industry average because it will help the success of the company in short term. So the last one is state how to improve the ratio for current ratio. So in my opinion, the best way to improve the ratio so that is higher than average is reducing the expenses in the company. So cut down to increase current ratio and review the budget carefully. For the quick ratio, the quick ratio is also known as the acid test or liquidity ratio, of course, and measure the ability of a business to pay its short-term liabilities by having assets that are readily convertible to cash. For the calculation quick ratio for Hikmah Bakti Berhad, so current asset minus inventory minus prepayment divided by current liability. So it goes to 4,400,000 minus 1,310,000 minus 490,000 divided by 2,200,000. So the answer is 1.18 or 1.2 times. For industry average is 0.9 times. So compare with the industry average with the Hikmah Bakti Berhad. So as we all know and see that the industry average is 0.9 times compared to the Hikmah Bakti Berhad, which better than industry average 1.2 times to compare with it. Means this company has a liquidity ratio of 1.2 times, which means that it can pay its current liability 1.2 times over with its most liquid asset in the company. So how to improve the ratio more than previously? So in my opinion, the best way to improve the ratio is for now is increasing sales and inventory turnover. Having greater turnover means greater cash in hand for the business company. That's all from me.
Hi, my name is Ahmad Hisham. So now I will explain to you about asset management ratio. So the purpose of the asset management ratio is to measure how efficiency in collecting debt. Asset management ratio consists of 4 things, which is inventory turnover, days sales inventory, non-current asset turnover, and also total asset turnover. So firstly is inventory turnover. Inventory turnover is the rate at which a company replaces inventory in each period due to the sales. The calculation of inventory turnover is inventory turnover equals to sales divided by inventories. So the Hikmah Bakti Berhad inventory over is 12.97 times. Now we compare to the industry average. So as we can see, the industry average is 9.5 times compared to the Hikmah Bakti Berhad, which is 12.97 times, and it shows that Hikmah Bati Berhad is selling goods quickly, and also there is the considerable demand for their products. Next, in my opinion, the best way to improve the inventory turnover ratio to be higher than the average industry is the business must gain more sales to get a good amount of the asset management ratio. Next, the day sales inventory. The sales inventory is a financial ratio that indicates the average time in the days that a company takes to turn its inventory, including goods that are work in progress into sales. The calculation of day sales inventory is day sales inventory equals to account receivable divided by sales and times 365. So the Hikmah Bati Berhad day sales inventory is 36.5 days. So compare with the average industry, as we can see, the average industry is 35 days compared to the Hikmah Bati Berhad, which is 36.5 days, and it shows that Hikmah Bati Berhad indicates either a slow sales performance or an excess purchase of inventory, which may eventually become outdated. So in my opinion, the best way to improve day sales inventory ratio to be lower than the average inventory is the business must to avoid the purchase on inventory too much and having more sales to get a better result to the company. Next, the non-current assets turnover. Non-current assets turnover is a management efficient ratio. It measures the annual revenue generated per unit of non-current asset. The calculation of non-current asset turnover is non-current asset turnover equals to sales divided by non-current assets. So the Hikmah Bati Berhad of non-current asset turnover is 2.5 times compared to the industry average. As we can see, industry average is 2.5 times compared to Hikmah Bati Berhad, which is 2.0 times, and it shows that Hikmah Bati Berhad indicates either a good sales performance or have enough amount of non-current asset. And lastly, in my opinion, the best way to improve non-current asset turnover ratio is to be lower than the average industry. Is the company must increase their revenue and accelerating the collection of the account receivable. And lastly, the total asset turnover. Total asset turnover is the ratio of the total sales or revenue to average asset. This metric helps investors understand how effectively companies are using their assets to generate sales. So the calculation of the total assets turnover is total asset turnover equal to sales divided by total asset, which is the Hikmah Bati Berhad of total asset turnover is 1.51 times. So as we can see, the industry average is 1.6 times compared to Hikmah Bati Berhad, which is 1.51 times, and it shows that Hikmah Bati Berhad indicates it is not efficiently using its asset to generate the sales. So in my opinion, the best way to improve the total asset turnover ratio to be higher than the average industry is the company may attempt to raise a low assets turnover ratio by stocking its shelf with highly scalable items.
Hi, so next I will explain about the debt management ratio. The purpose of this ratio is to show the extent to which a firm's activities are supported by its creditors rather than its owners. It says the ratio for times interest earned is better than for other financial ratios, but the higher the ratio, the more risky they are. We move to formula debt ratio. Total debt divided by total assets, which is 2,200,000 from current liabilities, plus with 1,200,000 from non-current liabilities to be a total debt, and then divide with 4,400,000 from the current asset and plus with 6,800,000 from the non-current asset to be a total asset. And then the answer is 30.36%. And then for the formula for time interest earned is the earning before interest and taxes divide by interest, which is 2,400,000 divide with 360,000, and the answer is 6.67 times. To compare with industry average, debt ratio is good because the industry average is higher, which is 40%. And for the time interest earned is bad because the industry average is higher, which is 7 times. Lastly, how can we improve the ratio for debt ratio is by decreasing the unnecessary in current liabilities and non-current liabilities. And how can we improve the ratio for time interest earned is by increase the earning before interest and taxes.
Hi, my name is Muhammad Amir. So today I will present about the profitability ratio. And the purpose of the profitability ratio is to show the business or the firms earning the profit from its capital asset. And the higher ratio of the profitability indicate the efficiency and effectiveness operation in the firms. So in the profitability ratio, they have 4 components, which are the net profit margin, gross profit margin, return on asset, and also the return on equity. So the first one is the net profit margin, and to calculate the net profit margin is by the net income we divide by the sales. And in this case, we got the 719,000, we divide by the 17 million, and we multiply with the 100%, and we got the 4.65%. And we can compare with the industry average, which is the 8%, and we can improve that by the company should do more the business activities, increase their net income, and in the same time increase their sales. So the second one is the gross profit margin, and the purpose of this ratio is to show how much profit that the firm made after the cost of goods sold (COGS). And to calculate the gross profit margin is we divide by the gross profit by the sales, and we multiply with the 100%, and we got the 42.35%. And compared to the industry average, which is the 38%, Hikmah Bati Berhad show a good action in generate a profits from their sales and show how the company control their cost wisely. And the things is improving the ratio is the company can reduce the costs that are not necessary in their cost of goods sold or their COGS. Other than that is a return on asset, and determine how effectively a business or the firms generate the income from their asset is the purpose of this ratio. And to calculate the return on asset, we divide the net income and the total asset, which is in this case we got the 719,000, we divide by the 9 million, and we multiply with the 100%, and we got the 8.78%. And compared to industry average, which is a 12%, it shows that the Hikmah Bati Berhad did not efficiently utilize their asset in generating income or revenue for their company. And how to improve is by we boost the net income and reduce the unnecessary asset and make the investment on the asset that will help the company generate more profits or incomes. And the last ratio in the profitability ratio is the return on equity. And the purpose of the return on equity is to show how well the investment are being used in generate income or profits. And to calculate this ratio is we divide the net income with the ordinary share, and we multiply with the 100%. In this company, we got the 719,000, we divide by the 4 million for the ordinary share plus the 1,800,000 for the retained earning, and we get the 13.62%. And we can compare to the industry average, which is 13%. It should be a higher in showing the business or the company generate income from its equity or investment that they make. And to improve this ratio is the company can reverse back their assets that is efficient and effective that will help the company generate more profits or income. They have the reason why I as the Rajahi Bank will accept the loan from the Hikmah Bati Berhad. The first reason is the company have the higher liquidity ratio, which means the company have the ability to pay back their debt or their short-term obligation. The second reason is to have a lower debt ratio. As we all know, debt ratio shows that how many assets the company should sell in paying their liabilities or their debt. And I, as the lender, know that this company have the stable financial situation. The third reason have a high gross profit margin, and we can see that the company has generated the higher profit after the cost of goods sold (COGS). And the last one is to have a higher inventory turnover and non-current asset turnover. From this, we can conclude that the company is quite active with a significant sales and active in restocking or selling their goods and generate their incomes. And from all this, I as the lender will more trust and have a high faith towards the company, which is in this case the Hikmah Bati Berhad.
5 limitation of financial ratio. The first one is information is history. Then a desirable target ratio may not be provided by the industry average. Next, the problem with price changes, which is inflation, can cause financial statement to be distorted. A high or low ratio does not always result in a specific decision. And the last one is accounting practices vary greatly between firms.